Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about Nikola Motors, ticker symbol NKLA. So I hope you guys enjoy it, and overall, I hope you guys learned something. And if you have any questions, go ahead and ask them down below, and I will get back to you guys. Also, if you guys want to get my free mini course, all you guys have to do is go ahead and shoot me a DM on Instagram. Just send me your email and I will enroll you in the school. So now let's jump into it, roll the intro, let's go. Bam! So now, over the past couple of months, the whole electric auto space was absolutely going crazy. We had Tesla running up, we had Nikola Motors running up, we had NIO or NIO running up. All these electric auto stocks were absolutely going berserk. But the one that I'm going to have in focus today is Nikola. Now, Nikola went from around $25 all the way up to about $95 per share, which is absolutely crazy because that's around a $30 billion valuation for a company that has zero sales. I understand the product looks cool. They do sell semi-trucks and some other types of trucks and accessories. I'm not saying their cars and trucks aren't cool. All I'm saying is they're not profitable yet. Yes, you guys can now, get reservations for trucks, but the thing though is you remember when Tesla announced their Cybertruck and you could physically see the car, you could physically see people driving it, you could drive it. Investors love seeing product, whether that's, on event releases and you can see people driving the car around, whether you can see the brand new product on stage. Nikola Motors is valued way more than it should be. They have no sales and I just think they're overinflated. Now, one of the main reasons why people are investing in Nikola is because of FOMO, fear of missing out. This is one of the things that you guys have to understand is emotion makes up so much of the stock market because people don't want to miss out on an opportunity. People don't want to miss out on the next Tesla. Now, if you're Nikola Motors, a lot of people are going to be like, you are the next Tesla, and I missed the run with Tesla. I missed investing early in Tesla, and I'm going to invest early with Nikola. But you have to understand that, look at Tesla's chart. You guys can see 15 years ago when they IPO'd, their stock didn't move a whole lot for about 15 years before the stock started to get more, volume, more popularly traded, and now is absolutely going to the moon. Nikola Motors has some struggle ahead of them. So now let's actually go ahead and look at Nikola stock. Let's look at support, resistance. Should you wait to get in? Where's the best time to buy this stock? Let's go. I hope you guys enjoy it. Alrighty guys, so we have ticker symbol NKLA, Nikola Motors here. This stock went from around 12 bucks all the way up to $93.99, around a 640% return. Now for all of you, stockholders that are still in this stock and you guys are profitable, here's what I would recommend doing. Sell your shares. If you guys are long-term believers in this company, you guys should actually go ahead and pick up a couple as the stock keeps falling down. But I'm actually going to wait because I do think a fair price for this stock here is going to be around $20 to around $25. The reason why I think that's a fair price for this is because it's not going to be very undervalued. It's not going to be overvalued. It still puts the valuation in the $1 billion mark. So I do think that is the perfect place to get into this for the long term. Now, another thing that you guys have to look at here is this. This is the RSI. This is the relative strength index. So really what this means is this tells if a stock is overvalued or undervalued. Now, when the stock is all the way up in here at a 95 on it, this is significantly overvalued. So this is when we'll have a tendency to see sell-off here. Now, when a stock comes into contact with the 30 on here, this is saying it's undervalued, and you'll have a tendency to see buying pressure. So right now the stock's at a 50, so it is on that middle ground, but I honestly would like to see this trading at around a 30 for me to even look to get into this. And that's where I kind of put it at around that $20 mark. Now, if let's say this stock explodes up and I miss the opportunity, that's completely fine. Because I understand that the more this stock goes up in price, the more risk it carries. Right now, with this company not making any money, I do think holding this really above those price points is extremely risky. So I would highly recommend having a nice solid base of ETFs, index funds, something that will kind of balance out that board. Because if you have all of your eggs in one basket here, and let's say this company goes down the drain, you're left with nothing. But if let's say you are diversified into some nice solid, ETFs, and this company goes down, then you're kind of at this little balance point, because these ETFs are going to provide you with a lot more equity in your account, and you're just going to make your money that way. But if you guys are right on this, then both your ETFs and your index funds will go up. So I do think it's just smart to have a nice solid base of ETFs. But this is definitely a high risk play right now for the long term. Definitely still a short opportunity. And I do think some buying pressure will kick in around $25. So that is it though. I hope you guys enjoyed the episode. And if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you guys tomorrow. Take care. Bye.